Hello, everyone. Welcome to another Mortgage Leadership Outlook. So glad you were able to join us on this beautiful Monday. I don't know where you're connecting, but here in New York, it is absolutely gorgeous. Had a great weekend. Very exciting. Some great things going on in the industry right now. I just talked to someone about new products coming. New, actually, non-QM products. It's very, very exciting. Today, we're going to have a good friend of mine, Ralph Rosynek. Ralph Rosynek is the, hold on for a second, let's bring up my notes here. Ralph Rosynek, Senior Vice President, Wholesale and Correspondent, Lending Channels over at Money House. Ralph is someone who's been dedicated to reverse mortgages for many, many years. I'm going to bring you in, Ralph. Hold on for a sec. Hey, Ralph, there you go. Oh, I have you on mute. Let me unmute you there. And we are unmuted. Now you can talk.
Hello. Welcome, everyone. I'm glad to be here.
So, Ralph, I want to get into your bio. I want to get I've got a few questions I want to ask you. But I just start us off. How many years have you been doing reverse mortgages?
Before I get full Alzheimer's disease, probably. I left the forward industry. I started in 1978 in banking. I left the forward industry in 2002 and became a direct endorsement underwriter for HUD for the HECM project. At the time, it was a project, and I've been in HECMs ever since. So I'm looking at 35 plus years.
Wow. 35 plus years. So listen, if you could actually, so what I love about your story is actually you're a mortgage broker, you're a wholesale lender, you've worked for big banks, you've worked for all sorts of different companies. So I love your story. If you could actually, I want to actually, so I know you, I can go through your resume, but I want you to actually to please share actually, who is Ralph Rosynek with our audience if you're watching for the first time. And by the way, if you're joining now, please, I want to know where you are. So if you're joining us now, please hit in the comments. Let us know your city and state. I want to know where you're connecting from. So if you're connecting from Oceanside, New York, like I am, please tell us you're in Oceanside, New York. And then without further ado, Ralph, tell them a little bit about Ralph Rosynek.
All right. Well, I'm talking to you today from my remote office in Chicago, outside a suburb of Chicago. I have actually been remote for the last 5 years. My desk is in San Juan, Puerto Rico, which is Money House's headquarters. And we have about 100 employees in Puerto Rico who today are sheltered in place, still under Commonwealth law, and just experienced, as many of you may know, a fairly good sized 5.0 plus earthquake on Saturday. So while they're going about doing their things and getting prepared, Money House has not conducted any lending activities or anybody on the island for since beginning of March. So when they closed down and sheltered in place everybody, they basically also shut down any opportunity to do any mortgage loan origination or loan closings. So they haven't closed any loans. On the U.S. side, about 5 years ago, David Levis, who's the sole stockholder of Money House, came to me. We had known each other for a while and asked me if I'd be interested in assisting Money House in launching a program across the United States for wholesale and correspondent. And at the time, I was had just finished a length of service, 5 or 6 years of service with RMS, Reverse Mortgage Solutions, out of Houston, and they were acquired by Walter Investment, if many of you know that. And so our senior management team was disbanded by Walter, and I went into consulting, and this was one of the things I was supposed to do is work with companies that wanted to do the HECM program. And I was very fortunate because Money House is a Ginnie Mae issuer, and they are on the forward side. So they issue MBSs, full government products. They also had their HECM credentials in the island. The island is populated by a lot of veterans and a lot of U.S. retirees. And so off we started. assembled a team, and that was 5 years ago, this past month, that we launched in the US here.
Fantastic. So tell me, actually, first off, I want to know, for those that are watching, I'm assuming most of us know what a reverse mortgage is, but please actually, break down actually, exactly the mechanics of a reverse mortgage. Let's assume actually you're not talking to, mortgage professionals that are doing dozens of loans a month, but you're talking to someone actually, who doesn't necessarily understand the power of a reverse mortgage and the instrument itself.
Okay, so let's do the Cliff Notes version. How's that? So reverse mortgage is a government insured. It's actually known as a home equity conversion mortgage, which is a HECM, HECM, and it is a HUD FHA product. It is designed for seniors 62 years of age and older who are homeowners and whose principal residence is actually the collateral for the loan. And that principal residence can have a mortgage on it, possibly as much as a 50 or 60% loan to value currently, in terms of mortgage to value. The product itself was designed to provide financial independence. You'll hear the term financial longevity, which is a term that's used among a lot of financial planners when they recommend seniors look at this product. And you'll also see that it's used as a retirement component. Reverse mortgage does not provide enough proceeds or long-term strength to possibly be just a singular retirement component. It's available across all 50 states and including the Commonwealth of Puerto Rico. And it's designed such that there are many similarities to a typical forward FHA 30, but there's some uniqueness, very big borrower safeguards for seniors. The program itself has flexibility. There are 6 or 7 different ways a senior can access the proceeds of their home. It's like a annuity-based calculation for a senior, in as much as the older you are, the more you are eligible for proceeds under the terms of the loan, providing obviously there's equity in the home to produce that. It does pay off all of the existing liens on the property with the proceeds first. It then provides for additional cash in 5 or 6 ways, as I mentioned. And it also can be used for a purchase, which is a very interesting concept. So if you have seniors that are downsizing or moving or relocating, it's a great tool to use because it does not require them to take all of the cash from the sale of their existing residence and funnel it into a new residence or go out and get a traditional mortgage. The term most associated with a reverse mortgage is there is no payment required. So the difference between a reverse and why it's called a reverse really is if you were to look at the note, in the note section about paragraph 4 or 5 of the ones that you and I have for our Fannie Mae or our Freddie Mac loans, there's a paragraph that says on the first day of each month and every first day of each month thereafter until paid in full, we're going to send the money house X amount of dollars. Okay. In a reverse mortgage, the note is missing that particular paragraph. So in other words, no principal and interest payment are required. But the common fallacy which we teach and educate a lot is the fact that you still have to pay for your taxes and your insurance. And that's an important factor of the reverse mortgage. Yeah. So it's very accessible. It's good that you're watching, and I'll tell you why. Here's my message through all the years. I'm not the oldest, but I'm seasoned, so to speak. There's actually a shortage of loan originators that know the product well enough and can actually provide this product access to seniors. Only about 3% of the eligible seniors in the U.S. actually have a reverse mortgage. So for those of you that are following all those refis on your forward loans now, think about a product that gives you a 97% origination potential.
Yeah.
And that's what this is.
So now let me ask you a question. So you mentioned actually the note doesn't say that a payment is required, but from what I understand, you can make a payment, right?
Yes, you can certainly. This is a negatively amortizing loan. The interest accrues each month. You certainly can follow along and make that payment. I'm actually going to be completing and transacting a reverse mortgage. I'm still working. One of the things that I probably will do is I'll make the interest payment or the monthly interest accrual payment just to keep my balance low. Otherwise, the reverse mortgage itself is designed largely to amortize or work with a senior until about 93 years of age. So it has the potential to negatively amortize all the way out. I'm 66. I don't know what my lifespan is, but if I look at the Rosyneks in general, they live till about late 80s, early 90s. It's potential that I could live to 89, 90, 91 or older, depending on how good science and God are to me. So that reverse mortgage will always be in place, providing I pay my taxes and my insurance, and I keep up, obviously, the maintenance on the property to HUD standards.
Got it. So, can you go through the HECM purchase, like the mechanics of it? Because it seems counterintuitive to have a reverse mortgage to acquire property. So go through the mechanics. If you could even actually think of like a deal example of what a HECM looks like, a HECM purchase looks like.
I'll use myself as a guinea pig. How's that? Okay.
Perfect.
I'm selling my great big house on the golf course that I no longer need because my 3 kids are all hopefully educated and have good jobs, and they're never going to come home again. So we have this big house, and we're downsizing to a ranch. So I'm actually doing a new construction purchase. So I'm in the process now of a house being built, a ranch house being built in a subdivision. And this house is up for sale, and when I sell this house, I will have all of the proceeds. My mortgage has probably less than 10 years on it, so I have a fairly good amount of proceeds that I'll have. The new house, the purchase price is, let's use round numbers. Let's say if the purchase price is about $500,000. I'm eligible at my age for approximately 250 to 260,000. That means in order to close and move into the new house, I would have to come up with proceeds of about 250,000 from the sale of this home here. Mm-hmm. And I would end up with a reverse mortgage for 250,000 and have no monthly principal and interest payment, and be responsible for taxes and insurance going forward, and not have to take all of the proceeds from this house and pay cash if I didn't want a mortgage.
Wow. That's wild. Okay. So,
it is.
All right. So
you can figure basically you're going to find the house you want, sales contract, figure if you're in your 60, if the borrower's in their 60s, 62 to 70 years old. Remember I said it's an annuity. Mm-hmm. So the older you are, the more you're eligible for. But in general, if you're working with a borrower's 70-ish, figure about 50 to 52% loan to value, although we don't use that term. And they only have to come up with the difference for the reverse and be in a new home and not have a monthly principal and interest payment.
Wow. Now, can you do a combination of that and actually generate lifetime income? Like
you actually could use more of your proceeds from the sale of your home and pay it down even more greater of a down payment than 50%, let's say, and you would create what's called a line of credit feature, so that line of credit or the excess amount that wasn't needed for your down payment, that line of credit actually has a growth rate associated with it. So over time, that line of credit that's remaining, let's say you paid $50,000 more than you needed for the actual reverse mortgage transaction, that 50,000 would grow over time if you didn't access it. We'll talk approximate numbers. I mean, the mathematicians can do the math, but anywhere from 8 to 11 years, there's a potential that 50,000 could technically grow and near double without having to do anything other than just leave it there in place on the line of credit.
And that can be used to generate the lifetime income. That's
Yes, that could be used to generate the additional income. You know, it's not. You know, in my particular case, my wife and I will have Social Security. We'll have some 401k proceeds, things like that. We'll have, and I'm in an industry like all of you. I don't need to retire because I'm too old to do the job. In fact, I think those of us that are approaching our 60s and 70s, we're actually better poster children for the product itself. Because in my particular case, I can tell a real story to someone.
Yep.
And that makes a lot of difference when you're working with seniors, which is a completely different style of marketing.
Yeah.
You know, you remember, this is a product you cannot sell. This isn't like a 30-year fixed rate mortgage. This is a product that you have to educate. You have to educate the seniors. You have a helper, which is the counselor. And you also realize that you have to educate the trusted advisors or all of the village that comes along with the senior.
Yeah.
So that's in place. So if you're going to take an education job, you better educate yourself first.
That's great. And so you are becoming actually, besides being the educator, you're being the student by actually using the products too. So I mean, listen to a HECM new construction purchase. I mean, this is wild. This is great. So I want to, got Joel Berman asked a question here. Ralph, can seniors use the reverse mortgage as a tool to navigate these difficult times, considering their cash flow may be impacted? So, seniors are right now facing issues. It could be actually that they're able to, because of actually their 401ks being crushed. Maybe it's not a great time to start taking money out of that and wait till actually their funds recover. So, this is a good time to look at the reverse mortgage, I assume.
This is a great time. And I'll tell you something. We've experienced and we've seen in the industry across the board, for those of us that are the issuers and the lenders, and there's only about 10 of us active lenders that are the direct lenders in the marketplace. We've all seen a big increase in our pipelines as the result of this. One of the things you're going to find as you start originating this is the 62-year-olds, the 63, 4, 5. One of the marketing opportunities, is the fact they're going to tell you, I don't need a reverse mortgage. I'm still working. Okay. Just like we had many seniors who said to us for a long time before the pandemic, I don't need a reverse mortgage. I have good, source of funds from my retirement and my savings that I put away. For those that have the good retirement and the savings, many of their funds are being probably eroded and will be so, depending on how long we go through this. For those that are still working, yes, you're still working, but what's your rainy day plan? Okay. And I think that the best way to sell this product, originally the reverse mortgage was designed for the profile was approximately a 72-year-old Black female in a high urban concentrated area back in 89 or 90. So in other words, it was a preservation product for a lot of families and so forth. Today it's morphed. The age is about the same, but what you have is it's now much more universally accepted, and it's being used by all different kinds of people for all kinds of needs and so forth. The pandemic brought about another thought process for seniors in general, and that is what if this happens again? Now that I see, what if my savings, what if I need more cash than I have available to me? What do I do? And you look at the fact that many seniors are house rich and cash poor. So this is a way of putting in place what I call, for me and for many seniors that are still working, it's a rainy day fund. I don't need it today, and actually I can pay the interest on the money. I can probably pay the principal off too if I want, but it always will be with my house. And in 5 or 10 years from now, if I really need that extra cash and I'm not employed any longer, and I don't have any active credit because I pay cash, and I have all of those other typical qualifying issues that you have with a traditional mortgage, I already have it in place. It can't be taken away from me. It stays with me for my lifetime and my spouse's lifetime, providing of course, the home is my primary residence, and I maintain the taxes, insurance, and so forth.
Okay, so and then just a quick point, I just want to bring up here that Mr. Berman said the process of originating reverse mortgages even involves the borrowers soliciting the approval of their kids, financial planner, attorney. How do you suggest these potential obstacles being dealt with? So before you answer that, I want to actually, I don't want to. We're going to come back to that. I thought that might be a little bit on topic here because you said something there that I've been meaning to ask you, and I'm glad I had the chance to ask you live, so I can have this response. So, all right. So let's say values right now are pretty stable, and I know there's an article coming up actually in the magazine where you commented on this. So we're talking about what happens if values start to erode. So if you have, let's say you start off and you have $150,000, that's given to you, but that's based on today's equity. So if the values go down, if your $500,000 house is next year worth $400,000, I hope it's not, Ralph, but if it is, what happens actually to that $150,000 equity that you thought you had sitting in there? Like, does it adjust? Is it a variable?
Okay. All right. So here's a great sales tool.
Okay.
The difference between a reverse mortgage and a HELOC is quite interesting. Most seniors might think that, I'm just going to go get a HELOC and put it on my home in case I need a rainy day fund. All right. What happened to the HELOCs back in 2008 and 2009 that we all had? They were frozen. They were frozen. And then they were stripped down to their balances and so forth. Once your proceeds are determined by a reverse mortgage and the calculation is done, you're guaranteed for the rest of your life that that's how the proceeds have been allocated. So if your house is valued today at $500,000 and you're allocated $250,000 of proceeds, and you basically need $100,000 of those $250,000 to pay off your existing mortgage, so you're left with a nest egg of $150,000, it does not diminish over time.
It's fantastic.
Okay. And that's a key factor to me or any other senior, that I don't have to worry, and I don't have to check the Wall Street Journal every day, and I don't have to get an appraisal every month or every year to determine that, I have $150,000 in security today, and 3 years from now when I break my hip, it's only going to be $45,000. It's a big difference. A HELOC, I would worry every day. How many HELOCs already in the last 2 weeks have we heard have been frozen or discontinued?
Yep.
You won't ever hear that with the reverse mortgage program.
So you're contractually locked in to that amount, and how does the income work? How does actually the lifetime income component, that's also a locked in thing that's contractually obligated to?
Right. If you at the time of origination and right before closing, a senior has 5 or 6 different options on how they want their proceeds payout. So let's say, regardless of the transit, you're on it's called a refinance transaction because you own the home. Let's say you're entitled to, after your mortgage is paid and any liens against the property, you have $100,000 sitting in this pile. They want to know, how would you like it? So you can put it all on a line of credit and then take it as you choose over time. You, in some cases, unfortunately, we have seniors that have health issues that require assisted care. And so that their care could be $4,000 a month. So you can set up with our servicer the fact that they'll send you $4,000 a month in your check. You could just want it for general income support, and we can provide you what's called a tenure, a TENURE payment, which means for your life, no matter if you live to 105, we'll send you X amount of dollars every month.
Wow.
You can pair a term loan or a tenure payment with a line of credit, so you can have more than one way that you want your proceeds distributed. And the beautiful part is, and I have a really, really tremendous story, an example that started out bad and just got tremendous. I had a gentleman I worked with several years ago that had cancer, and the doctors basically gave him 24 months was the best possible diagnosis or term they could give him. And so he took the reverse mortgage out because he lived alone, and he wanted to make sure that his healthcare professional that actually was moving in with him was about $5,000 a month. He wanted her paid every month. And lo and behold, he started one of these protocols that they have with cancer, and the protocol, actually, he was a very positive patient, and suddenly was told that his diagnosis probably was a little bit more aggressive than they thought, and it was no longer a 24-month period. So under the terms of the reverse mortgage, it went the other way. So he got a waiver. He got a waiver. He should have gone to church and lit 10 candles that day. But what also happened is he no longer needed that assisted care daily, and was able, under the terms of this mortgage, you can reset remaining proceeds that you have for as little as $20 or $25, depending on the servicing fee for the servicer. So wow. He restructured his funds, took it off the $5,000 a month payment train, and put it all back in one pile, and now chose to allocate it himself by drawing it monthly. Yeah. So it's a great story. It was a great story, and it just shows the power of this program, that we give the seniors choices, and they have those choices long term.
It's so amazing. By the way, I did not know that. No, I knew you had options. I didn't know you could change those options, down the road. So
right.
Biggest.
As long as the funds are there. I mean, if you use all the funds, you have no more options. It is whatever it is. But if you, and like I said, a perfect case, if you're 68 years old and you don't need a reverse mortgage, okay, why would you get one today? Because you don't know what your house value is going to be in 5 years more when you need it again. But at the same point in time, you can set it up as a line of credit, but you could also make changes to assist you in paying for services if you're not capable of, with the available funds that you have.
Fantastic. So the idea is get it today. You don't need to use it. The payments aren't. You don't have to start payments, right? You can just set it up. Actually, the line is there. You can start to use, and then at some point, actually, when you let's say maybe you're not even retired. Maybe you're going to retire in a few years. When you're ready to retire, you can return this on, so it could be supplemental income. And the biggest risk in retirement is longevity.
That's right.
Longevity trumps everything else. So could be healthcare, could be inflation, deflation, all these other things. But longevity is the one thing that multiplies all of these other risks.
Right.
So, by taking that lifetime income, you actually, take that risk off the table. And by knowing, actually, you can use that to pay long-term care expenses. And they say that 3 out of 4 people at some point in their life will need some kind of long-term care. So
most definitely. Even if nothing else, think about it. At 66, I just bought a new car. Is that car really going to last until I'm 89? Okay. Probably not. I've never driven a car more than 5 years or past the warranty. I mean, why am I going to stop now? But don't forget, in 5 or 7 years, if I'm retired, that's a lot of cash to lay out, 25 or 30. Who knows what cars are going to be in 5 years? But then if to go in and get a to get a car payment for $600 a month,
Yeah.
and pay the interest, is that a good idea? I have options if I have a line of credit.
Yeah.
You know.
Yeah, and especially probably at that time it's going to be flying cars. So
Yeah.
I don't even know what that's going to be. So all right, we're going to go
I'm
back.
going to get my Tesla with a jet.
Awesome. I could totally see you actually, flying around in your plane car Tesla.
Well, it's still 3.5 or 4 hours for me to get to like Los Angeles when I have to talk to seniors at the trade shows and everything else. Maybe it'll be faster. Who knows?
Hopefully, I've been as a big Jetsons fan. I think it's late that we don't have this already. So
That's right.
So let's go back to actually Mr. Berman's point or question, and I think this is an important thing to deal with. So again, the process of originating a reverse mortgage often involves borrowers soliciting of both approval of their kids, their financial planner, and their attorney to move forward a reverse mortgage. So how do you suggest you move? How do you suggest these potential obstacles be dealt with? Because that is actually the big thing. You're basically saying to the heirs, you are not going to actually have this big nest egg that you thought was going to be passed down to you. Talk a little bit about that.
Let's talk about the change. Let's talk about the change I've seen in borrowers in the last 20 some years.
Okay.
When I first started out with this product, it was much more closely held by borrowers that their children, they didn't want to do this because their children believed that they were entitled to an inheritance. One day at my desk late at night, 3 people showed up: an older woman, a younger woman, and a child about 7 or 8. And the older woman was there because she wanted to get a reverse mortgage and put her financial affairs together and so forth. Throughout the origination process, the daughter just ticked and ticked and ticked. And finally, I was the president of the company. I had a loan originator that was helping me there do the origination. I leaned forward and said, "Is there something wrong?" And she looked up at me and she said to me, this was her daughter. She said, "You're playing around with my daughter's college education." And I thought to myself, what the hell is this all about? Excuse my French. And sure enough,
I don't think that's French.
She had envisioned that she was when her mother died, she was going to get all the proceeds, and that was going to pay for her daughter to go to medical school or whatever else. So I thought I would beg the question. I reached forward and I grabbed the hand of the senior, and I said to her, "Can you tell me when you're going to die?" And her eyes welled up and she looked at me, and the daughter leaned over and said, "What the hell kind of question is that?"
What is that?
I said, "Do you understand what you just said? You have to tell me when your mother is going to be dead to see if we even need to go through this charade, because your daughter is 7 or 8. She'll be college bound in about 14, 16 years. Your mother's only in her early 70s. She's got to die during that period." And the mother suddenly opened up her eyes. She was very quiet. She took that crooked finger that we always see when the seniors your mother's pointing to you or your grandmother's pointing to you, and she pointed it in the face of her daughter and said, "That's enough. You be quiet. Mr. Rosynek, I'm getting tired. Can I have the rest of the papers? Mark where you want me to sign, and I'll have them returned to you tomorrow after my attorney looks at them."
Wow.
So what do you think about that? My message is I do a lot of trade show speaking. I enjoy it. My message to a lot of seniors is completely unacceptable by many standards, and that is, I tell them, I've told my children, when I die, if I leave enough to dig the hole, you'll be lucky. Children are not entitled to an inheritance. I don't know where that came from. It's probably an old European thing. The only European things I remember my parents telling me is when everybody came over during World War I and World War II, they've had in their mind you buy real estate because you can, if you work hard, pay for it, and when you own it, they can't take it away from you.
Yeah.
Somehow, culturally, we became a group of people that said, oh, and you work real hard, deny, stash it all away, and then die so that your kids can have a great life. And that's not the case. And it's certainly not the case today with people like me, the baby boomers that are in their early 60s. We have no intention of leaving big sums of cash to our kids. I paid for all their college education. We gave them cars. They had the best clothes. They did all the things. They had all the things they wanted and needed.
Wait, just time out. Listen, my dad's watching this. Okay, so like you're potentially you're ruining. Yeah, like I thought actually, I thought there was going to be a nice little nest that you're well, actually, it's obviously he's all in on this too. He loves actually the reverse mortgage too. So. And I'm curious, actually. So here's the thing: you've basically said it's not a selling process; it's an education process. Most of the reverse mortgage originators I know are don't even do forwards. So can you take a forward originator and bring them into? Wow, he just said he took notes. Thanks. How do I block him? Can I block my dad? Someone tell me, how do I block my dad from here? Right. So where was my point? My point I was going with there.
Can you take someone and turn them into?
Can you take a forward reverser, forward next to the originator, and turn them into? Because listen, right now, you and I both know there's a lot of top non-QM, originators out there that are looking for ideas. That are looking actually for. I've talked to a handful of originators and myself that were doing a ton of business, did a ton of great bank statement loans, and they were good. They were good loans, but obviously the market's not there as much as it is. Well, there is a non-QM webinar that we do today on Thursday. A little shameless pitch for it, but anyway, back to this. So you have forward originators. Can they be taught how to do reverse, and what does it take to get them into the mindset that so they can do a reverse mortgage?
I think forward reverse mortgage. I think as an industry, we've always thought that there's a difference between a forward and a reverse mortgage loan officer, and there are product differences. There's no question, but that education process can be learned very easily. By way of forward loan originators deal with what I'd say customer objections, or they deal with the marketing side and the competitive side at a much greater pace than on the reverse side. We basically have a few programs. As I said, there's 8 or 9 or 10 of us that are the actual direct lenders. So everything is same. What the really qualified and experienced loan originators take to this product is the fact that they can talk, once they learn it, they can talk and speak confidently, and they can also add this as really a consideration factor to someone who's hell-bent to take a regular mortgage out, a 30-year mortgage, and didn't know anything else. Yeah. So the ability to educate comes in the form of providing confidence and assurance to the senior that they're making the right choice. And every reverse mortgage requires that the borrowers attend counseling, and the counseling is HUD-approved counselors. They look to bring the paperwork, that the pre-qualification paperwork that the loan officer provided to the borrowers at the time that they met. And that counseling actually adds value to the loan originator's task of education, because it verifies and corroborates everything that they've told the senior. So there's a government official that's providing them with the same support that the loan originator did. It works very well.
That's great. The one time actually where we want the government helping us.
Yes. In this particular case, I guess you could say that. Yeah.
All right. I do want to ask you, how, COVID-19, has impacted reverse mortgages, because I'm curious about that. But before we go there, I want to ask you this. In terms of actually, the reverse mortgage, do you see actually that is there actually other partners that you see getting into this, like other big players, or is this something that can only be sold through, like originators, is this something like a tech platform could play, like I mean, because
Yeah.
please share with us if
Well, when we first started out, the internet was very clunky back in the 80s and early 90s. It wasn't helpful. This today you have the I call them, I don't want to give anybody any extra due or cost. I call them the spatial mortgage companies, okay? That they're trying to sell you that they're the latest in technology, satellites and instant. Remember that still a majority of the seniors, while there are baby boomers coming in, we still have 70 and 80 and 90-year-olds. We do 90-year-old reverse mortgages all the time. It's very common. So they're not as internet savvy.
Yeah.
About 30%, I would say, are still internet, and that number is growing. They are assisted by their children, so that pushes the number up for technology. But in general, call centers work to some degree. TV infomercials have been used as some marketing tools. I'd say for the 60-year-old crowd, I think they're good with FedEx and telephone. But I think as you get to the older demographics of the seniors, it's a little bit more, it's face to face. This has started out as a kitchen table product, because most transactions are done at the kitchen table. And even today, a good number of those transactions are.
So it's like, this is a product that if you are a forward originator, it's one of the few products that you don't have to worry about the fintech actually space coming in and blowing you out.
No,
It's
no.
just something. So that's great to hear. That's great to hear. So all right, let's talk about the ugly elephant in the room. Talk about actually COVID-19 and what has the impact been on reverse mortgages, and start off actually, from the physical process of going through, because there has to be an appraisal that's obviously done.
Right.
And then we'll talk about actually, the capital markets, but talk about actually the physical process on how that's changed and adjusted because of COVID-19.
We've always had, first of all, the process starts with, generally there's a reach out, or if the MLO is working from a networking perspective or whatever. The number one way I think that we actually see a lot of loan officers get their reverse mortgage business is the number one fault that most of the originators have in the marketplace, and that is they don't tell everybody that they have access to the product.
Right.
Okay.
Right.
They'll introduce themselves that I'm a mortgage banker, a mortgage loan originator, but they don't add that extra tag, which I've told them over the years. And by the way, I also help seniors with reverse mortgages. That's a really important comment because everybody has someone they know that's 62-year-old or years or older that could possibly benefit from this. That information, initial contact is usually backed up with a pre-qualification package, and it's the loan originator who actually assists the borrowers in either taking phone counseling or going to see a face-to-face counselor. There's probably not a lot of face-to-face counseling going on. It's mostly phone, which is entirely acceptable, and you can get as many people on that call as you'd like. The application process can be handled in an overnight package very successfully, because the counseling and the borrower is familiar with the figures and information ahead of time. It's much easier to manage through that package, and they usually put it on the coffee table and want the kids to look at it anyway. So it's a group project. Appraisal wise, exterior appraisals are now in place because of the COVID. Not a full appraisal, but there is some consideration you have to make for an exterior. That's it. If there's a lot of value inside the home, sometimes it may not be realized as a result of it. But the exterior works very well. We have a lot of seniors that call, and we basically tell them, if you want a full appraisal, have the appraiser take off their shoes, provide them with some kind of paper booties or socks, open all your windows and doors, ask them not to touch anything unless they have to. And I think the need has replaced some of the fear at this point, because the fear is far greater if they don't have the cash. Closing wise, and it's a typical routine closing, although it can be done remotely, electronically in some states and so forth. The access process is not really really more burdensome than it is in a traditional non-pandemic environment, I'd say.
Yeah, fantastic. And Tara Schuster just said, I get my docs DocuSign. They go through fast.
They do. They do.
That's fantastic. And maybe you can, I'm not sure if I fully understand this. You probably will. Love this. Also, do you know if the government pays that commission? I'm sorry if I should know this. This is the best product ever.
This is a typical, with regard to pricing. As I said, there aren't that many of us direct lenders. Our pricing is very similar. The products are all the same that are there. You're going to find that this is old, non-TRID type disclosure, meaning our rate sheets have yield spread premium on them. One of the unusual things that you're not used to seeing with regard to a rate sheet is we pay based on utilization as well. So
really?
So largely you could have a rate and a margin choice, and then depending upon how much of the proceeds the borrower accesses on the day of the closing, determines the compensation. And the reason for that is there's as lenders, we're responsible if the borrower takes a line of credit and does not fully fund it on the first day. We ourselves as a company have to have sufficient cash to fund those advances over time.
So hold on for a second. Time out, because I don't want to get away from something you just said there. So if the borrower chooses actually to say, hey, listen, I'm just going to start out right now. I'm going to do a reverse mortgage. I'm going to take $20,000 just so I can do some updating to my house. But I'm going to leave the rest in there. Now, obviously, the originator's going to get compensated on that first draw.
Right.
They're going to get compensated on future draws?
No, they are not compensated on future draws. That's the risk I have, to always have the cash 5 years, 7 years, 9 years down the road in the cumulative pile. The originators are compensated if the borrower does not fully draw up front. There's a formula involved with the origination fee, which is 2% of the first $200,000, 1% thereafter, to a maximum of $6,000 is what the origination fee that can be charged. And then, of course, there's the yield spread premium that's offered based upon the margin and the utilization from the lender themselves. The combination of that is what goes on the HUD-1 and what's disclosed on the good faith estimate. So there is no TRID, there's no closing type of activities of wait and hold and so forth. It's still back what we all learned for those of us that have a little bit of gray hair and more.
So yield spread premium, which is just weird coming out of my mouth in 2020. But so yield spread premium, because of what we've seen, actually, going on with the capital markets, have they been significantly cut back, or what is the landscape looking like? Has there? I mean, obviously there's no underwriting criteria that could be modified, but at least pricing has that been affected?
Pricing was nominally affected for about 2 weeks. Was majorly affected for about 2 weeks because of the sheer response and quickness of the overall impact to the mortgage industry. Prices continue to levelize. This product is actually highly demanded. It's highly sought after by investment bankers, and the reason is it performs so well as a portfolio. It has safeguards and so forth, and there's actually a shortage of product available for broker dealers and investment bankers that are looking to buy it. That contributes to the fact that the yield spread compensation on this is a little bit higher than everybody would expect, and continues to be that way.
Fantastic. That's great. That's good. Listen, I mean, one of the things I love about this is it's kind of like, and everyone I know who does reverse mortgages, they do it actually, they love doing it because the satisfaction they get at helping seniors and just kind put them in a position of financial freedom. I mean, so it is a wonderful thing actually to have that. And they also make a nice, nice couple of
yes. The compensation as well is based. The effort is there. It could be an intensive origination if you have seniors that have a lot of questions and concerns. I've never been hugged and kissed by so many little old ladies and little old men over my life. It's a tremendously feel good, warm product where you go to bed at night and know you've actually changed some people's lives. Tara keeps asking about who pays the comp. It's paid by us lenders, just like it would on a forward mortgage. So depending upon how the loan is priced, it's paid at the table at the time of closing.
Cool. So, all right, now we're going to talk about some of the ugly things that people talk about actually when they think of reverse mortgages. All right, so let's talk about actually. Let's play the devil's advocate. Talk about the ugly elephant in the room. So, all right, so seniors are losing their homes because of reverse mortgages. Right. Talk about that nonsense, please.
Most of us lenders have these things called the 10 myths of a reverse mortgage. It's like a standard flyer that we all have, and we give it to all of our mortgage broker clients. We tell them, just put your name and your contact information on here. It's a great marketing piece. Okay. Obviously, myth number one is the bank owns my home. Okay. Totally incorrect. This is a mortgage. It's a traditional mortgage. It's on a Fannie Freddie uniform instrument. The only difference is this mortgage, as I said, is missing that paragraph that has how much you're going to pay every month.
That's right.
What it has that every other mortgage has is you have certain conditions in the security instrument that you have to meet those, reps and warrants and conditions, or you're going to get foreclosed on, no different than if you had a 30-year fixed rate mortgage.
Yeah.
So the other myths that are real prevalent are the fact that, when I die, my spouse is going to be kicked out on the streets. Okay.
Yeah.
Married couples are required to enjoin in the mortgage together. So they both have rights on it. The loan is calculated based upon the youngest borrower. So in a marital state where you've got, marriage is recognized, husband and wife are on there. So if the husband dies, the wife can remain in the home, providing, of course, she meets all the reps and warrants and requirements, that is paying the taxes, insurance, making the property, minimum property standard requirements for as long as she lives. So at 66, if God has in store the fact that I'm only living till 67 and my wife is going to live in this new ranch that we're building until she's 95, she just better be able to make those payments.
All right, so let's get to the end and okay. You're using you as the example, so let's continue with you as the example. So
all right.
You're passing away, and then your wife passes away, and now the property, it's there, and it's actually, so now it gets passed down to the heirs, but there's no equity in there. So how does the property,
how do we terminate it? How does it terminate the end of the story? the end of the story is approximately, and like I said, let's just talk approximately. We can go to the number counters for the actual number. About 90% of the reverse mortgages end in foreclosure. And the reason is both borrowers have died, or all the borrowers of record are dead, and the property now goes through a foreclosure process because the taxes aren't being paid, the insurance, and so forth. That being said, if there's any remaining equity when the foreclosure process finishes,
Yep.
it goes back to the estate. But these are non-recourse loans, so the children or the estate are not responsible for the debt and upon the death of the borrowers. But this loan could also go to foreclosure if nobody occupies the property as their primary residence any longer, or if they obviously sell the property or they move away. In the case of a married couple or two borrowers, if I were to fall and break a hip and go to convalescent care for another facility for 2 years or whatever else, as long as my wife is still on the property and maintaining taxes, insurance, everything else, we're good.
Yeah.
So the children or the estate has the option of buying out the property if they want to keep the property in their home and in the family and so forth, and they can make arrangements with the servicer on the loan to do that.
Okay, wonderful. So, or they can just not. They can just walk away.
Yeah,
Right?
and most children don't. They're very grateful to the servicer. They let them know if there's anything they can do, but by and large, there is no equity left in the home or minimal dollars, and so they leave it up to the servicer to turn the property around, and it becomes REO for purchase for a whole new family to start over again.
Fantastic. All right. So Tara has another question. So if it's in a trust, that helps, correct?
The property will support, the loan will support the use of one of the most common is a life estate, wherein families that are more sophisticated and want to worry about estate planning once the passing of the parents or the borrowers, you can set it up so, and we'll recognize a life estate where the parents are in control while they're both alive, and upon death, the property passes to the children, but the children are still responsible, and they do sign on and recognize the validity of the HECM. So they still have to meet those terms and standards and so forth. You can also do traditional trust. That trust has to be open and certainly has to allow for us as the lender and for the servicer to do whatever is necessary to protect the interest of HUD and the lender.
Got it. So can work with a trust, but like the idea is, I guess, get the trust after the mortgage is done.
There's the typical defaults with this mortgage. So you can't add borrowers afterwards. You can't change control on the property and so forth. Yeah. You're looking at refinancing. These loans are refinanceable, but the nice part about a HECM is it kind of has a built-in refinance mechanism in it. In as much as if you utilize that line of credit feature with the growth there, you don't have to certainly the value is based upon age and age of the borrower and value of the property. So in 10 years, the borrowers are 10 years older, and the property, you would assume the property is going to value more. But you have to remember, in many cases, it's been negatively amortizing the interest. So a lot of that may already have be in play and not available.
Got it. Fantastic. Listen, this has never been a better time to get in reverse mortgages, and it could potentially, and who knows where values are going to go. I mean,
yep.
Well, all experts are saying values are going to hold tight and everything's going to be great, but we just don't know. There is, listen, we never thought we would be at the point where we're at, where 20-30% unemployment. So nothing is guaranteed to be the way it was. So one thing for sure actually is we can get a contract with actually that's a reverse mortgage that does these guarantees that takes so much risk off the table. Really, it's just a great product. You can make a lot of money actually, working with this product. But more importantly, I think is this the thing that you said is the amount of hugs and kisses that you get. Hopefully not too much anymore, until actually the CV gets out of the United States. But
Yeah.
the feeling that people get, that I have a lot of friends of mine that do reverse mortgages. Tara's one of them, and she loves them. Everyone I know loves them, to the point actually where like they say actually that they would do it even if they weren't even making money doing it.
That's right. One of the things I enjoy the most is actually the look of surprise on a lot of the loan officers' faces when I actually tell them the power of this thing and what it can do. They're actually shocked, and they're like, "That's a government product on top of it." So, you get to the point where I've done this for so long and everything else. That's the part I enjoy the best, is planting the seed to a lot of people to open up. We all get into that forward refi rush. Yeah. But when it's over, and it's over every 3 years or so, it goes away and then comes back. What do you do in the meantime? This is a mainstay product. Yeah. There's always going to be a need, and there are always going to be the benefits that you can provide seniors, and they'll be looking for it.
Fantastic. So listen, do you mind if I post up your email address up on the screen?
Please do.
Here? Okay.
Please do. I know we kind of mentioned some of the information out too. We do boot camps around the country and do live 2-day sessions with everybody. But I certainly would be more than happy to answer questions, or if you've got scenarios, my team will take a look at something. We do that just as part of our service to the industry.
Fantastic. All right, I'm gonna roll your. There you go. There's Ralph's email address. Email him, say hello to him. Get an invitation to his boot camp. Congratulate him on his HECM purchase, HECM new construction purchase.
How about that?
Amazing. So yeah, that's fantastic. So listen, and anything you want to say in closing? I can't. We've been talking for an hour already. And by the way, I'm not even done with my questions. I'm gonna have to sign up for the boot camp so I can actually get the questions.
Well, that or I'll have to come. My move-in date is July 30th. I'll either be the proud owner of 2 houses or 1 at that date, depending if this one sells. So I'll make a point. We can do a follow-up and get all those extra questions, and I'll tell you from a borrower's perspective how the whole thing went.
That's fantastic.
But I just
take video.
My contention is but I should do that. But my contention is what I'm hearing the most is, because we're doing the boot camp virtually this time, is everybody wants to know how long it's going to be. How long is it going to take me to learn this, and how many days is it? And my response is it's a very small investment of time at this point of time in your career to learn something that's going to have so much impact to a demographic of people well over your lifetime. And that's the key. You said the compensation, we've said the compensation is great. It's more than compensation. Yeah. These are people that need your assistance. And just because we're in our 60s, we don't know this any better than you all do in the 40s and 50s. So I think it's a great goal to make sure you can offer this product.
Yeah, fantastic. And I think we're going to leave it at that. So listen, email Ralph. Ralph, stick around for a second. Just want to talk to you one last time. I'm going to take everyone out. Everyone, thank you again for joining us for another Mortgage Leadership Outlook. So excited. So this week, we've got a couple more shows coming up this week. Got Pam Marin's going to be on tomorrow. Pam Marin she was there in 2008 when the mortgage mess was going down, the financial meltdown. She was there helping borrowers, helping them actually with loan modifications, short sales. what a just a hero that she was, and she's stepping to the plate again, helping out as we're facing forbearance. But what she's actually doing is she's not only helping them now, but she's getting everyone ready, so that once we're on the other side of this, people are going to, those forbearance borrowers are going to be ready to buy. So that's going to be Pam Marin and David Licken. David Licken, I'm so excited. David Licken, one of the most connected people in the mortgage industry. He's also one of the longest running podcasts in the mortgage industry, and has been just an unbelievable leader, loved by so many people, mostly by his clients. And then wrapping up the week on Thursday, we got Terry Clemens, he's the executive director for the National Consumer Reporting Association, which is going to be great to hear. Really, what are we seeing on credit files when it comes to forbearance? What are the creditors going to do when they're looking at this forbearance? So again, thank you everyone for watching. We really, really appreciate our fans that have been watching, tuning into every one of our episodes. Please like, share. If you're watching us on YouTube, subscribe to us. We want to make sure that more people are getting this message, and the best way to do that is make sure that you engage and you watch as much as you can. Thank you so much for being amazing, being the leaders of your community. And with that, I'm Andrew Berman from the Mortgage News Network and National Mortgage Professional Magazine. Thank you for watching.